So, Luxembourg just handed Ripple the keys to the entire European Union. Full electronic money institution license. Not conditional, not preliminary, full authorization across all 27 member states. While retail's panicking about monthly unlocks and watching price charts, Ripple quietly secured one of the biggest regulatory wins in crypto history. And most people don't even understand what just happened. Let me be real with you. This isn't another partnership announcement that turns out to be a pilot program. This isn't a memorandum of understanding with no teeth. This is full regulatory approval from Luxembourg's financial regulator, recognized across every single EU country. Germany, France, Spain, Italy, Netherlands, all of them. Ripple can now operate as a regulated financial institution throughout Europe, issue electronic money, provide payment services, integrate with banks, all under full MiCA compliance. And here's what separates this from everything else. Ripple moved from conditional approval to full authorization in under a month. Most crypto companies take 6 to 12 months for this process. Ripple crushed it quickly. That's not luck. That's institutional-grade regulatory competence. That's what a decade of building compliance infrastructure looks like. They've done this over 75 times across multiple jurisdictions. They know how to navigate regulators, provide documentation, meet standards. Let's break down what an EMI license actually unlocks. Electronic money institution status gives Ripple permission to issue electronic money, provide payment services, and function as a regulated financial entity throughout the EU. That means RLUSD can now scale across European markets legally. Ripple payments can pitch European banks without regulatory friction. European fintechs can integrate Ripple's infrastructure without compliance risk. Think about what this does strategically. Every European bank considering XRP for cross-border settlements can now do it under full regulatory supervision. Every German fintech exploring RLUSD can partner with Ripple without legal uncertainty. Every payment processor evaluating blockchain rails can use Ripple knowing it meets EU standards. That removes the single biggest barrier to institutional adoption: regulatory uncertainty. When a bank's compliance department evaluates a crypto partnership, the first question isn't whether the technology works. It's whether they can do this without risking their banking license. If the answer is unclear, the project dies. Doesn't matter how good the tech is. If compliance can't sign off, it doesn't happen. Ripple having full EMI authorization means the answer is now yes, this is fully compliant. That accelerates every partnership conversation, shortens sales cycles, makes decisions easy instead of risky. This is not financial advice, but let's talk positioning. Ripple now holds regulatory licenses covering North America, Europe, Asia, and the Middle East. More licenses than Coinbase, more than Binance, more than almost any crypto company. And here's the kicker. Ripple isn't just a stablecoin issuer. They have end-to-end payments infrastructure, on-demand liquidity corridors, G-Treasury for corporate treasury, Ripple Prime for institutional brokerage, the full stack. If you're trying to understand how regulatory approvals translate into utility and price action, how to track institutional accumulation instead of following influencer calls, you need frameworks. Pattern recognition from studying real market cycles. That's what I break down in my crypto course. Case studies, data-driven frameworks, risk management that works in volatility. This isn't hopium. This is how you think like an allocator instead of a gambler. Links in the description. Now let's connect the dots. First, RLUSD expansion. Ripple's stablecoin sits at over $1 billion in market cap. Growth concentrated in US and Asia. Europe's been slower because institutions require regulated issuers. With full EMI status, European banks can custody RLUSD. Payment firms can integrate it. Enterprises can use it for treasury. That unlocks hundreds of millions of people and the second largest economy globally. Second, Ripple payments scaling. The platform processes over $1 trillion annually. Most runs through Asian corridors. Europe's been underutilized because compliance slowed adoption. With EMI authorization, Ripple pitches European banks without friction. That could double transaction volume. Not speculation, realistic projection based on market size and existing infrastructure. Third, competitive positioning. Tether dominates but lacks institutional trust, still fighting regulatory battles. Circle has approvals and capital but focuses on stablecoin issuance, not payments infrastructure. Traditional players like Swift have relationships but lack technology. Ripple sits uniquely with compliance credibility, infrastructure depth, and now full EU status. That's strategic leverage. Fourth, partnership acceleration. Ripple recently extended deals with Guarantee BBVA and Riyadh Bank, both before the EU license. Now imagine partnerships with European banks waiting for regulatory clarity. Deutsche Bank, BNP Paribas, Santander. These are trillion-dollar institutions. They move slowly, but they deploy capital at scale when compliance boxes check. Here's the macro context retail misses. Europe's ahead of the US on crypto regulation. MiCA framework is operational, clear rules, clear enforcement. The US, still waiting. Still dealing with SEC versus CFTC fights. Still fragmented. That head start means European institutions adopt crypto faster than American banks waiting for clarity. Ripple's EU authorization positions them to capture momentum while competitors wait. Now address the elephant. Ripple announces massive EU approval and XRP barely moved. Retail thinks the market doesn't care. Wrong. First, the market priced in conditional approval weeks earlier. Full approval was confirmation, not surprise. Markets move on surprise. Second, macro headwinds overwhelm micro-catalysts. Everything's red. When risk-off dominates, catalysts get ignored temporarily. Institutions aren't ignoring this. They're waiting for macro to stabilize before adding exposure. Third, regulatory approvals don't create instant utility. They create permission to build utility. The license doesn't make banks use XRP tomorrow. It enables them to use XRP over coming months as partnerships get signed and infrastructure integrates. That timeline doesn't excite traders wanting quick moves, but it excites allocators planning for next year. Different horizons, different strategies. Fourth, on-chain data tells the real story. Long-term holder supply increased. Whale wallets at multi-year highs. Exchange balances at multi-year lows. That's accumulation, not panic. Institutions building positions while retail watches charts. Every cycle, same dynamic. Retail sells support to institutions. Then, when fundamentals translate to price, retail FOMO buys the top from institutions. Let's get specific on XRP utility. When Ripple operates in the EU, they're running on-demand liquidity corridors using XRP as bridge asset. European bank sends payment to Asia, converts euros to XRP, sends across XRPL in seconds, converts to local currency, real-time settlement, no pre-funded accounts, no trapped capital. That's XRP's job. That's why ODL volume grew significantly year over year. Every RLUSD transaction on XRPL requires XRP for fees. Those fees get burned. As RLUSD scales, transaction volume increases. More transactions mean more XRP burned. Deflationary pressure on supply. Feedback loop where RLUSD adoption benefits XRP holders through supply reduction and network activity. Not competition. Symbiotic. Here's what nobody discusses. Ripple's EU license creates compounding credibility. Every successful regulator relationship becomes reference for the next. Luxembourg approves Ripple, makes France easier. France approves operations, gives Germany confidence. Germany greenlights partnerships. Spain, Italy, Netherlands follow. It cascades. Same globally. UK approval helped EU. EU approval strengthens Asian case. It's a moat competitors can't replicate quickly. Compare competition. Tether has massive market cap but fights regulatory battles everywhere. Banks won't integrate at scale without clarity. Circle has approvals and capital but lacks end-to-end infrastructure. They issue USDC, great, but they don't have institutional payment rails. PayPal launched PYUSD, growing in corridors, but limited compared to Ripple's footprint. They focus consumer transactions, not institutional cross-border settlement. Different markets entirely. XRP ETFs have been accumulating with strong inflows. Over 40 consecutive positive flow days recently. Real institutional capital, not retail buying small amounts, institutions allocating millions. This happened while price consolidated and macro deteriorated. Institutions see value regardless of short-term action. Compare Bitcoin ETFs, which saw outflows same period, or Solana ETFs where flows dried up. XRP demand remained consistent because allocators evaluate fundamentals, not narratives. If you want to learn how to analyze institutional flows, interpret on-chain data, track smart money, and make data-driven decisions during volatility, that's what the crypto course covers. Custody signals, exchange balance analysis, whale tracking, separating noise from accumulation. This isn't theory, this is pattern recognition that works. Links in the description. The question everyone asks: if RLUSD does settlements with zero volatility, why does XRP matter? Answer: they're tools for different problems. RLUSD is stable, predictable, perfect for corridors where dollar exposure is desired. 1 RLUSD equals $1, always. XRP is bridge asset for corridors where pre-funding is capital-intensive or stablecoin infrastructure doesn't exist. Real example, US to Philippines remittance. Traditional banking requires holding pesos in Manila, ties up capital. With XRP ODL, convert dollars to XRP, send instantly, convert to pesos. No pre-funding, no trapped capital. XRP has deeper global liquidity than any stablecoin except the largest. Tighter spreads, better execution, lower costs for high volume. That's why ODL grew year over year, not declining, growing. Utility scaling because it solves problems stablecoins can't efficiently. Emerging markets where infrastructure is underdeveloped, cross-border corridors needing instant settlement, treasury operations needing liquidity without lockup. So what's XRP's job in this new regulatory environment? Bridge asset for corridors where stablecoins don't work efficiently. Fee token powering XRPL that settles RLUSD and tokenized assets. Liquidity layer connecting fragmented global markets. Infrastructure token for the institutional financial system Ripple is building. That job hasn't disappeared, it's evolved. And institutions understand this even if retail doesn't. Want the frameworks to track this evolution, interpret institutional signals, and position accordingly? That's what the crypto course delivers. Stay ready, stay liquid.